Let's go now to our friend Bimnet Abibi from Galaxy Trading. As always, my friend, great to see you.
Thanks for having me.
So I guess the country and the political complex in the country is bogged down with this debt ceiling debate. Let's just start there quickly. I mean, markets seem kind of pinned, at least in crypto markets, have been pinned for a couple of weeks. Bitcoin at like 26 to 27. Equities they look a little choppy. I've seen some down days. I've seen some flat days. But everyone's just watching this big event, and it currently has no resolution today on Wednesday. Any thought? What are your thoughts on it?
You know, it's another example of dysfunctional government at its finest, partisan politics at its finest, and obviously, leaves folks wanting more out of their representatives, first and foremost. Secondly, I think it's relevant for markets, but it's a lot of noise right now, not that much signal, in the sense that I think the real negotiating is going to be kind of closer to like the actual X date.
Literally right up to it.
Right up to it, which I think is going to really be around like June 7th, June 8th, June 9th area.
So not the June 1.
Not the June 1 that Yellen is saying is like the absolute.
And June 1 is what, next Thursday?
I think sooner than that, I think, but yeah, it's somewhere around there. Yeah, next Thursday sounds right. So we've got like a week to 2 weeks to officially get something done. I think we will. The question is like once we do get something done, like what does that mean for markets? And to be honest, right now it's really tough. There are some Fed folks that have been calling for an additional 2 rate hikes this year.
Wow.
At the same time, like we have 30 some odd basis points of cuts priced in for this year. So very divergent from like what the market is saying.
Yeah.
And there's, some folks that are calling for, Q4 is going to be a really bad recession, like, hard landing camp.
I saw David Solomon was saying
Mm-hmm.
at some CNBC thing, forum out west, he was saying that it's looking pretty clear there'll be some kind of recession, but he said it would be milder, he thought, as of this moment. That was his view.
No, I like the idea of a mild recession.
Back half of the year.
Yeah, on the Q4. Maybe
but
Q1.
Have we seen any evidence that that's actually starting yet, or it's still in the pure prediction phase?
If you squint.
So you got to squint at the data.
No, I mean, so there's a couple of things. Like one of the things we like to look at is like first order derivatives of economic data, right? So are like initial jobless claims like going up at an increasing rate, or are they, going up at a decreasing rate? And so things of that nature. And what we're seeing like in that context and some of the other sort of broader leading indicators is that there is some weakness in the U.S. economy, right? Small business sentiment surveys, like the CFO things, manufacturing PMI being sub 50, right, in contraction territory, all of the regional Fed surveys being in deep negative territory, the cost of like supply chain elements and all those supply chain metrics that have come down a lot. And generally, like the price of commodities, with the exception of oil recently, right? They've generally been trading lower. And so there are lots of signs that, at least the pace of inflation and the pace of economic recovery and growth is cooling. Mm-hmm. The question is it cooling fast enough to bring inflation down and to alter Fed path and Fed policy in a meaningful way? And so that's the real TBD. But yes, there are cracks.
Got it.
Right? Like you look at mortgage applications, they're down a lot, right? Credit card spending's up and things of that nature. So there are signs, but like to David Solomon's point, like there aren't like a crazy amount of signs right now.
And they're not like deep, scary signs.
They're not. Like the commercial real estate is like a little scary out there. But again, like there was a commercial real estate portfolio sale that went through the other day at decent levels.
On CRE, maybe help explain this to me. One thing I know obviously hurt commercial real estate was COVID and work from home, right? And you've heard municipal leaders, for example, Mayor Eric Adams in New York, has pleaded with business to make your employees come back in, right? Because it's not just the real estate; it's the coffee shops and the lunch
it's
places.
Everything. Yep.
It's literally the MTA,
subways,
it's
everything,
taxis. Is that how is what else is that the main reason work from home is or what were the other factors like?
Oh no!
Like,
It's a fundamental change in workplace behavior by the entirety of the U.S. workforce,
Which is
for the most part.
is work from home, even if if just some days.
Correct.
Yeah.
And it's also just like folks' expectations of what they need when they are working, right? In terms of like lounge areas and like sunlight.
So you have to build up like more expensive offices also.
Correct.
Yeah.
Right? Because all of a sudden there's a bunch of real estate that nobody wants. And
So and it's older.
Nobody wants the older stuff.
And it's hard
the
to
nice
retrofit,
stuff is
right?
like going cheap because there's so much supply. Right? And so and it costs a lot of money to re-outfit old buildings and make them like new.
I saw also one solution to this has been in some places
Residential.
Turning them into residential. But
That'd
I
be nice.
read this great piece, actually, I think it was in the New York Times a couple of weeks ago about like where that's worked and also what types of buildings that's worked on and how like a lot of places, including like a lot of Manhattan, is not you really can't retrofit them.
Yeah.
Right.
Yeah. So it's a huge challenge.
They don't have windows that open, for example.
Correct.
Which you literally need. in residential.
No, like these buildings were not designed to be residential, and so there is like this looming thing of like all like go through like downtown Chicago, downtown San Francisco.
Not good.
It's empty.
Yeah,
and like like you were saying, the stores and the businesses in the areas are like severely impacted.
New York has to be one of the least. One of the best positions compared to some of those other cities, though.
I think it's much better than San Francisco.
Yeah,
where they were barely working there to begin with, and now
a lot of at-home tech developers and stuff. Right?
Exactly. And so I actually need to follow up on this, but there was a building that was going up for sale. It was a Salesforce building in San Francisco.
The Salesforce building?
One of them.
Okay, because they have one. I think Salesforce Tower is the largest building there.
Yeah, but there's another one.
The other one
that is going up for auction, and it was like purchased in like 2019 or 2018, something like that. I believe it was like for north of like $200 million, and like it's going for much less than that now.
Wow.
Like I think it's gonna go for like 60 million or something stupid. And on top of that, it like needs like 40 million in additional spending to like get it up to snuff.
Oh wow.
To like release
make
afterwards.
it even usable, really. Yeah.
Right. So it's like, one, and then you have the banking side of things where like, bankers have made loans assuming certain property values,
right,
certain recovery rates.
And they're pretty long duration loans, right? So
depends, but yes.
Yeah.
So it's we'll see what the spillover impacts are.
That's a tough, like pretty long-term question for America in general, right? I mean,
no, absolutely.
Yeah, wow.
And it's a really interesting challenge, and so it's like is all of downtown and modern America, like, is that ever going to be the same again?
And it's weird because a lot of young people and young workers, they like to live in cities, but they don't want to go into the office.
Correct.
So it's like that's why that conversion to real residential, if it can be done, is so important if it can be done. But like I said, I read that it in large part cannot be done with the buildings we have right now.
Correct.
And it takes a long time, by the way, to either knock down and rebuild or retrofit. Like these are not small projects.
No, absolutely.
Wow.
But yeah, that's just another sort of, overhang out there. But, we've been talking a lot about the things that are going to impact, folks in Q4. Excess savings are going to come down because of, student loan repayments, current like existing high credit card balances and credit card balances that are growing at, historically high interest rates. And so, there's, we just raised interest rates by 500 plus basis points, et cetera. Like, there's going to be a lot of things in Q4 that we need to kind of see happen, and that are going to broadly drive weakness. Yeah.
All right. So in crypto, we've talked about this before, and I think this is probably still the case. Particularly for Bitcoin, I think most people are looking at it from here. Paul Tudor Jones, I think, said a couple weeks ago that he loves Bitcoin. He'll always have some Bitcoin. But right now, when they said, would he buy it now? Right, that like today. Aaron Ross Sorkin asked him on CNBC. And he's like, maybe not right now. Like we had a big run and like, who knows? A lot of people are talking about like supply dynamics now, right? Because you do have, I will say, you do have the ordinals driven sort of like application layer possible expansion on Bitcoin, which is sort of an interesting, like maybe that will have an impact on Bitcoin performance this year. But that's one thing, supply. What else are we sort of looking at and like are you thinking about when it comes to crypto this year?
Yeah, no,
You know,
absolutely.
Ethereum staking is a thing. It's up. I mean,
No, absolutely. I mean, just look at the Lido staking statistics. I think we've already like restaked the amount that Celsius unstaked.
yeah, it's all-time high staking
yeah,
right now.
and so
I think
I
the
think
queue's like
that's
the queue to enter is like 30 plus days now. There's so many people trying to
right. So
bring stake
that's
online.
a huge story. And I mean, if you just look at gas prices over the past couple of months, like they've been high, like people are doing stuff, or maybe it's still memes and dogs, coins and stuff, but people are still doing stuff on chain. So that's constructive. But, for me, generally, like what I'm looking for is like the macro response in Bitcoin.
Yeah.
Right. This is a year where I think gold is probably going to take out, its highs and make new trend highs as folks realize that, in the hard landing scenario, if these governments and central banks actually achieve their goal of bringing inflation down, right, they're going to bring it down to a level where it's going to force them to re-engage the monetary sort of spigot, right? Yeah. It's like, wait, we're going to bring inflation down by tanking the economy. What's your response to tanking the economy?
How are you going to stimulate the economy?
You're going to print money again. And so it's like eventually you're going to get back to that point, and that's when you should see like hard money really perform.
Right.
And that's when I would expect Bitcoin to sort of take its next leg.
Okay, here's a tough question too. And I know that people are of many minds on this. I think the consensus is one way that we know, but debt ceiling. Let's say a default, or not even a default. A default's like, who knows how this plays, right? But let's just say like a 2011 scenario with like a, it gets done, but we get a credit downgrade or something because of it. Like, it's tumultuous. It doesn't end up getting passed perfectly at the end of night, so it's tumultuous. And most people, I think, obviously would say what risk assets perform terribly in that scenario.
Correct.
I think I saw on CNBC
S&P down 10% plus. Some
I
people will say
saw
more.
It was down 17% in 2011 leading in, and it was that just on the market's fears about what would happen, and that sort of kicked the politicians into gear to get it done. Isn't there an argument, at least on a fundamental basis, that Bitcoin should perform well in that scenario?
I think it should
theoretically.
Perform, I mean,
it should moon, right? It's a global, decentralized.
Absolutely should moon.
But
I mean, what people need to realize is that the dollar and treasuries are the denominator for everything.
Right.
Every asset on the planet is measured against dollars and therefore treasuries, right? When you start having doubts about the denominator of what every asset, currency, like you name it, is measured off of, Bitcoin should rally, right? Because it should force you to think, what should my denominator really be?
And what is money and all of those questions?
100%.
And it's global, so it's not just Americans, right? I mean, it's
exactly.
like other people losing faith in America or American, the risk-free rate no longer being risk-free.
Correct.
Should... So, but what do you think that would, let's say?
No, because right now it trades like a risk asset. So people are going to see S&P down 10%. So they're going to be like...
Right, sell everything.
Sell everything.
That isn't gold or
However, I do think that there's a lower bound to Bitcoin that, I'd say Bitcoin's going to outperform beta adjusted to S&P.
Yeah.
I would tell you. Because there's Bitcoin trades partly like a risk asset, but also, similar to gold, right?
Right, because there's a lot of holders
that view it that way.
But not enough.
Traders.
And part of that's like, right, because there's sort of the hodlers and then there's the speculators still.
Yes, exactly.
And it's like
But ultimately, like, there's no way that a default by the U.S. isn't, in theory, a positive development for Bitcoin.
Right. I mean, you're looking for other denominators, like you said. It's really a story of just, it's been almost 15 years since Bitcoin launched, and it's still just not understood well enough. It really does. I think you and I know, and I think our audience does too, really does have properties that make it attractive in an environment like that. It really is. I was saying this, if you want to go be a prepper and hide in your bunker, right? Like, well, okay, you've got some gold, but you want to spend that, you're going to have to melt it or use the whole coin or the whole gold bar, and you're going to have to leave your bunker. You have to go meet someone and trade with it. But Bitcoin, you could just send at any time, anywhere.
Yeah.
And it has these monetary policies that do make it interesting and gold-like. So it should work in an environment like that. But
It doesn't-
is it just not enough people know that? And not
well,
enough people
yeah.
think about it that way?
Yeah, I think it's just a lack of like full thought process. You know, I
Yeah.
was we're running a little long, but I actually do think this is an exercise worth talking about.
Yeah.
But basically, right, there's a lot of aspects of Bitcoin where you're like, oh, it's a great asset in this scenario. That's a sub 5 probability event,
Right.
right? And like, there's a slew of like sub 5% probability events that would make you want to own Bitcoin, right? We are in the middle of one of them, right?
Right.
The U.S. government not paying its obligations,
Right.
right? In a world where the U.S. government is not paying its obligations, right? I want to own alternatives, right? And crypto being, another
Right.
alternative, right?
Especially one that you can send, right? Real estate's great, but I can't pay you in real estate.
No,
Right.
absolutely.
Gold, you can kind of, but it's not.
Right. And
yeah.
and then it's like, money confiscation, like,
Well, the other one,
riots
we
in
had
the
another
street.
one of these, which was any kind of uncertainty in the safety of the banking system. So like
Correct.
this year has seen like
No, safety. Like you don't trust your bank account, right? Like
Right.
you lose faith in like their bank runs, right?
Right.
Like this is like literally you're hitting on
Back
like
to back.
these back to back
Yeah.
like kind of things. But again, these are like one. You think about it, this is happening in the U.S. Right, the same phenomenon is like everywhere.
Right.
It's like, wait, like guys, we're like other places don't have debt ceilings. They just keep printing money in their own nonsense currencies that continue to devaluate over time.
Right.
Right. And so like hyperinflation, right? Like we're dealing with an inflation crisis
Right.
in the US right now and abroad. I mean, you look the UK CPI
I saw
numbers.
it came in hot.
Right, like the money is just not what it's
not
worth
working
the same.
It's not working
worth-
properly. It's
Yeah,
like
the inflation is too damn high, and the monetary responses, like there's a limit to that, right?
Yeah.
Like you don't want riots on the streets because like the economy is tanking and food prices are still soaring.
Yeah.
Right. And so you are hitting on like all of these like stress scenarios where if you were like thinking back like 2 years ago, 3 years ago, or at any point in time, you're like, what are some of the tail scenarios that, should mean that Bitcoin's got more value? And you're hitting on so many of them.
Yeah.
And so that's why, like, for me, like, even though like I see, price action that isn't great at times, it's just a matter of time. Like if you just PV like this kind of behavioral response function over time versus what we know are going to be our challenges going forward, right? Like the value's just way higher because it's an option on all this stuff. And
Yeah.
so anyway,
Love it. Bimnet Abibi from Galaxy Trading. As always, my friend. Great to see you.
thank you.